India's gold prices are being driven by a mix of global market trends, dollar strength, import duties and rising inflation, which continues to drive demand. According to a report, India holds 15% share of the world's $23 trillion gold market, with central banks globally buying up $84 billion worth in 2024 alone. Meanwhile, in the gems and jewelry sector, diamonds make up nearly 47% of India's exports, followed by gold jewelry at about 39%. The US and the UAE remain India's top export destinations, as overall exports stood at $25.7 billion in February 2025. Joining us this morning is Amit, Modak, the CEO and Director of P.N. Gadgil and Sons. Amit, good morning. Pleasure having you here on News9. Help us unpack how is gold likely to react now, given that there is somewhat a little more clarity, though the ambiguity hasn't gone away, but there's some more clarity on the way ahead on tariffs. So given the context of tariffs, how do you expect gold to move from here?
Present US president contest, we cannot say any clarity or anything, because every day he used to issue new statement. Right now also he has issued that some countries will pay a higher tariff, but it will be applicable from 1st August, and still he is saying that in between, if they negotiate, he will reconsider. So reconsidering is going to continue, and that uncertainty is going to continue. Moreover, the main reason for this gold rally or the silver rally is not only the tariff. There are a number of other factors which are affecting. One most important factor is unemployment and inflation, which is there everywhere in the world. Jobs are getting reduced day by day, and inflation is going up day by day.
Right.
And it is beyond the control of any of the government. Means not only the US or not only the India or any specific country, it is a worldwide scenario.
Right.
So that is a main factor which is driving this gold, because uncertainty in the currency, higher inflation, lower employment, all these factors are always drive the gold prices. And now the central banks are also joined for driving these gold prices.
That's right.
If we consider last 8 or 10 years, their buying spree, and last 2 years, or even the first quarter of or second quarter of this calendar year, we are looking at a huge increase is there of their buying of the gold as a safe asset.
Right.
Because overall their forex reserves have gone up to the tune of 20%.
That's right.
As compared to the other assets, like it may be the FX or the treasuries or the bonds of the foreign currency bonds and all these things. So all central banks are interested in gold, except the US and German central bank.
That's right. Mr. Modak, I also want to understand that gems and jewelry export is a large volume of India's overall exports. And we've seen this sector getting hit even when we saw the slowdown in the Chinese economy in the immediate aftermath of the COVID and the China +1 lockdown policy being removed. But overall, in the context of inflation being imported into the US, Chinese economy yet to pick up to its pre-COVID levels, is India's gems and jewelry sector, the export part of it, going to continue to be under pressure for the foreseeable future?
It will be remaining under pressure, because as gold prices goes up, ultimately that jewelry price also goes up for per unit or the per item. And discretionary purchase is there always. The jewelry is a discretionary purchase. If you see, the prices are going up in the gold, but exports are going down in the gold and jewelry, because there is a more interest for the gold as an investment rather than the jewelry. We in India always see that people are more and more buying jewelry rather than the investment gold. In foreign countries, especially US, they are more inclined towards the investment. For gold, they are considering it as an investment asset.
Right.
But as prices started going up, they are reducing their jewelry fancy, and they are also interested in investing in the gold as an investment asset.
All right.
And that export downward definitely will affect the India, because it was a major export in the total export portion of the country.
Right.
But tariff is not the only concern for them, as they have already established their base when the tariff discussion started almost 8 months ago.
Right.
They already shifted their production base and manufacturing base or the headquarters to the Arabian countries or the
That's right.
Bahrain like countries from where they can export. They have shifted it, and so for them, those companies as such, there is no damage. As a country, yes, we will lose that share in the overall global market.
All right, Mr. Modak, thank you for your perspective on that. Let's leave it at that for now. But pleasure having you here on News 9.